Hi traders, welcome to another edition of weekly forex forecast on FXless, which is for 24th to 28th of August 2020. In this week, I'm going to share with you guys the list of currency pairs I am watching out for next week, should in case of trade breakout opportunity. If today is your first time viewing my YouTube channel, you are welcome. And then do not forget to like, share, put a comment down, hit the subscribe button as well, click on the notification bell so whenever I release educational content of this kind, you're gonna be the first to be notified. Remember, forex trading is an high risk investment as well and high reward investment, so do not trade with the money you cannot afford to lose. Here are the list of currency pairs I am watching out for next week. I have the British pound sterling paired against the USD. I have the euro paired against the USD. I have the Australian dollar paired against the USD. I have the euro paired against the Japanese yen. I have the Australian dollar paired against the Japanese yen. And then we're going to wrap up things with the XAU paired against the USD or good. So let's dive into the weekly forex forecast right now. The first currency pairs on our watch list is the British pound sterling paired against the EURUSD. We can see the bullish pattern right here on this currency pairs. Can see right from swing high right here, swing low. Can see this a bullish upward rally. And then last week, we had a series of consolidation, on the British pound sterling paired against the EURUSD. And then if I should connect, the resistance right here, high right here to the high series of highs right here, and then low right here, the rejection structure right here, we can see this is a transformation pattern within a bullish rising channel. And then likewise right now we can see another formation of a bullish rising channel right here. And then we all know in a bullish rising channel, whenever price gets at a resistance structure of such bullish rising channel, there is high tendency for the bears to step in to pull price downward. So what are we looking at for next week? For the fact, we had the first wave right here, we had a downward wave right here, a bullish wave right here, a bearish wave right here, and a bullish upward wave right here. So there is high tendency for the bears to come in next week to pull price downward for the next bearish wave. And then we can see the consolidation of price right here. So I'm going to zoom in on this currency pair so we can see the key level structures we have to watch out for next coming week. So here is the chart. The next key level structure, that is the resistance structure, acts at the price level of the 1.32638. You can see how this structure has been serving as a point of resistance for this currency pairs last week. And the next support key level structure acts at the price level of the 1.29831. This is the support. We can see how it acted as a support for this short upward bullish rally right here. So next week we have to pay close attention to this key level structure. A daily close below the key level structure of the 1.29831, then I wouldn't be surprised the bears are willing to pull downward the next bearish wave. And then the next key level structure, which acts at the 1.27472, might be the next key level structure the bears are willing to retest. Alternatively, next week, if the bull steps in aggressively and break above this key level structure of the 1.32638, then it's a signal the bulls are trying to expose the next key level structure, which acts at the price level of the 1.34769. Can see that? So from this high right here, the next key level structure acts at the 1.34769. So let's check that on the weekly chart frame. So on the weekly chart frame right here, we can see last week. I'm gonna zoom in. You can see last week price made a reversal of price from this key level structure of the 1.32638. You can see price carved gravestone, bar formation. So next week I wouldn't be surprised if the bears pull up price downward to retest the key level structure, which acts at the price level of the 1.29834. And then if the bulls fail to defend this key level structure of the 1.29831, don't be surprised the bears are willing to pull up price downward And then the next key level structure we have to look out for is the 1.27472, and then this could serve as a point of confluence zone for the dynamic support trend line right here, and a key level structure of the 1.27472, and then this would serve as a bullish wave right here, a bearish wave right here, bullish upward wave, bearish wave, upward wave right here, and then a bearish wave right here. So this is what I'm looking at for on the British pound sterling against the USD next coming week. The next currency pairs on our watch list is the euro paired against the USD. Right from this medium right here, from the bullish flag right here, from the pole right here, we can see our price transform into an aggressive bullish upward rally. And then if I should take the measurement objective of this bullish flag right here, from the swing low right here to the highest swing right here, this channel, that is 670 pips. If I should take the measurement objective from the swing low of this channel right here to 670, we can see this was a price of 670 right here, and this was one of the reasons whereby we figure out weakness in the euro paired against the USD. We can see our price have been going through a transformation of trend within the range right here, and then we can see how the key level structure of the 1.19485 acted as a resistance structure, and then we can see multiple of rejection right here, whereby the key level structure of the 1.17098 is acting as support. So I'm going to zoom in on this currency pairs right here so we can see the whole picture properly. Zooming in on this currency pairs, we can see the key level structure, the 1.17098 is acting nicely as a support structure, and the resistance structure of the 1.19485 is also acting as a resistance zone. And then again, we can figure out the dynamic support trend line from the swing low right there, how price did respected this dynamic structure right here. You can see that. So I wouldn't be surprised if the bears comes in next week to pull more price downward to the key level structure of the 1.17098. And the intersection right here has high probability to act as a confluence zone between the dynamic support trend line and the key level structure right here. So next week, I'm gonna patiently pay close attention to this medium right here to see the reaction of the bulls and the bears. As well, pay close attention to the key level structure of the 1.19485. If the bulls fail to defend the key level structure right here, that is a 1.17098, then it's a signal the bears are willing to retest the previous key level structure, which acts at the price level of the 1.14954. Alternatively, next week, if the bull steps in aggressively, whereby they defend this key level structure right here, or they put price at this medium right here, and they ensure a daily close above the key level structure of the 1.19485, then it's a signal of bullish interest willing to pull up price more higher. So let's check on the weekly chart frame the next potential upward rally on this currency pairs. So on the weekly chart right here, we can see last week our price made a bearish reversal from the high right here, and the market actually closed at the price level of the 1.17943. So there is a signal right here, bearish prayer, and then we can see right here a bearish prayer right here. This is a family variation of a GBPUSD. What we can figure out right here, there is a depreciation in bullish momentum right here. So if the bears should step in and make a rotation of price and then enjoy a daily close below this key level structure of the 1.17098 back into this dynamic trend line right there, and then the bulls fail to defend this dynamic trend line, then the next key level structure is the price level of the 1.14954, which the bears have no high tendency to retest. And then if this should occur, then I wouldn't be surprised the pattern formation which occurs right here can be tagged as a false breakout. So let's check that on the monthly chart frame. So here comes the monthly chart frame. You can see the month of August is actually trying to carve a variation of the doji family. So if the month of August ensured a monthly close back into this dynamic trend line right here, then this is a false breakout. If I should zoom in on this currency pairs, you're going to see we had a symmetrical triangle which had been existent from the swing low right here, upward rally right here, and then don't be surprised, this is a first breakout out of this multi-year symmetrical triangle right here. So it's gonna take a monthly close back into this channel because we can figure out maybe this is a first breakout or not. So to finalize our analysis, next week I'm gonna pay close attention to the key level structure of the 1.17098 to see how the bulls and the bears react at this zone, and then as well the resistance structure of the 1.19485 to see how the bears and the bulls react at these zones right here. The next currency pairs on our watch list is the Australian dollar paired against the EURUSD. And then we can see from the swing low of this currency pairs right here, we can see the massive bullish upward rally right here, upward rally, and then we can see the transformation of trend right here. So the pattern we have right here is a narrow bullish channel right here. So I'm gonna zoom in on this currency pairs. So zooming in on this currency pairs, we can see how price had been fluctuating through this key level structure, which acts at the price level of the 0.71961. We can see the rejection of price right here. Price carved a bearish engulfing bar right here. We had a short bearish rally right here, even though this is a very low bearish momentum right here, and the price went further again to carve a bearish engulfing bar right there. So for the fact this is a rising narrow wedge, we all know in a narrow rising wedge there's high tendency for bears to take over to the downward trend. So that is the pattern we got right here. So the next key level structure we have to look up to is the key level structure of 0.70349, and that is if the bears ensure a daily close below this dynamic trend line right here, which was a support for this swing low right here, likewise right here, and then here and here we can see our price respected this dynamic support trend line right here. So next week, if the bears should pull up down price, then the next key level structure we have to pay close attention to is the price level of the 0.70349. Failure for the bulls to defend this key level structure right here, then don't be surprised if the bears pull price downward to the next key level structure, which acts at the price level of the 0.68081. And then failure for the bulls to defend this key level structure right here, the next key level structure we have to look up to for the bears is the price level of the 0.6672. Alternatively, next week, if the bulls should step in aggressively, whereby they pull price upward, they need to ensure a strong daily close above this key level structure. That is a strong bullish momentum. We can see how the bulls ensure a close of price above this key level structure right here, but it was a weak bullish momentum. So the bulls have to ensure a daily strong bullish momentum out of this key level structure right here. So let's check on the weekly chart frame. Here comes the weekly chart frame of the Australian paired against the USD, and we can see the key level structure which had been rejecting price at the price level of the 0.71961 was a resistance structure right here, and then resistance structure right here, that was the first breakout right there. So this is strong key level structure. The bulls have to build strong LD momentum in order to break out of this level. And then if you should pay close attention to the swing high right here and the high right here, we can see connection of our trend line right here, catch the three high swings right here, and then catch the highest right here. So there is high tendency for the bears to put price downward. And then if I should zoom in on this currency pairs right here, you can see depreciation in bullish momentum right here. We can see the aggressive bullish upward rally right here. You can see the strong bullish momentum right here, and then you can see depreciation of bullish momentum right here. And then we can see our price carved a gravestone path. That was a last week market. So don't be surprised if the bear steps in next week to put price downward to this key level structure of the 0.70349. And then if the bulls fail to defend this key level structure, which was a resistance right here as well a resistance right here, then don't be surprised the next key level structure the bears have high tendency to head to is the key level structure of the 0.6672. So next week, the Australian dollar paired against the USD is on my watch list. I want to see what the bulls and the bears have to get done at this medium of the key level structure of the 0.71961. and the dynamic support trend line right here. But if you are taking this trade next week in a bearish bias, remember you are trading against the trend. Okay, so make sure you don't risk more than you cannot afford to lose. The next currency pairs on our watch list is the euro paired against the Japanese yen, and then we can see the bullish aggressive rally on this currency pairs to the swing high right here. We got a swing low right here and the swing high right here. So right now we can see price is trying to transform into another bearish wave. So let's check this currency pairs based on the weekly chart frame so we can see the overall trend properly. Here comes a weekly chart of the euro paired against the Japanese yen, and then you can figure out from this level structure right here we had a bullish upward rally, and then since then price has been in a transformation within a bearish multi-year channel. So I'm gonna zoom in on this currency pairs right here so we can see the breakaway point. Here comes the breakaway zone. After price broke out of this medium right here, price got to the key level structure of the 124.249, and then the bear sets in to make a reversal, to make a retest of the dynamic resistance trend line, now acting as a dynamic support trend line, which was a point of intersection with the key level structure of the 119.271. So the key idea right here is we had a bearish wave right here, which we can tag this as wave 1, and the right here we had a bullish wave, we can tag this as wave 2, and the right here we had a bearish wave, we can tag this as wave 3, and then here comes a bullish wave, we can tag this as wave 4. So don't be surprised the bears are trying to pull price downward in order to carve wave 5. So next week I'm gonna patiently pay close attention to this currency pairs. Even though I sent out a shorting trading signals on this currency pairs, I told the VIP members to short this currency pairs. Currently right now, if you are taking the trade based on my trading signal, you will be in profit right now. So and the trade is still active throughout last week, so the trade is gonna hold on to next week. So this is a bearish Arami formation right here. So next week, a weekly close below the key level structure of the price level of the 124.249, which was a support right here for the rally right here, has high probability to interest the sellers to pull price downward to the next key level structure, which acts at the price level of 122.685, which was a resistance right here for the market structure right here, likewise a resistance structure right here. And then not only a resistance structure, we can see it serves as the neckline of the double bottom right here. So next week, don't be surprised if the bears pull price downward to this key level structure of the price of 122.685, which was a neckline for this double bottom structure right here. And then if this should occur, then don't be surprised the boost comes in at this structure of the 122.685 in order to pull price upward to carve another bullish wave. And then this would be wave 1, the right here as a wave 2, the right here as wave 3, and then right here as a wave 4, and the right here as a wave 5, and then the next wave potential for the boost is wave 6. So this is what I'm looking out for on these currency pairs next coming week. Next on our list is the Australian dollar paired against the Japanese yen. If you watch the last analysis I gave on the Australian dollar paired against the USD, you will figure out the Australian dollar paired against the USD and the Australian dollar paired against the Japanese yen almost have the same pattern in play. We can see multiple of retest right here by the key level structure of the 76.525, and then the boost failed to ensure a close above this key level structure, and then whereby the bears are pulling price downward. So I'm gonna zoom in on this currency pair so we can see the price action properly. So next week, what are we looking out for? For the fact price have been respecting this dynamic trend line right here of the support, and then Friday bar tried to close above this key level structure right here, but that was a week of bearish momentum right here. So if the bears should comes in next week aggressively and pull price downward, thereby ensuring a daily close above this dynamic support trend line right here, the next key level structure to look up to is the price level of the 74.310. Alternatively, next week, if the boost should step in, whereby they ensure a daily close above this key level structure of the 76.525, then it's a signal the boosts are not yet giving up. They are still interested to make a price breakout out of the key level structure of the 76.525. So let's check the time frame on the weekly chart. So here comes the weekly chart. If I should zoom in right here on the weekly chart, you would figure out this trend had been on a long time bearish rally. You can see from this swing high right here, we can see a bearish long term trend right here. So let's try and zoom in on this currency pairs. So zooming on this currency pairs, we can see the transformation which we had right here. You can see the swing low right here. We get a swing low right here. So next week, if the bears should step in, whether they pull price downward, then don't be surprised if the pairs break below the key level structure of the 74.310. The bears has a high tendency to re-expose the next key level structure, which acts at the price level of the 72.458. And failure for the boost to defend these key level structures right there, don't be surprised the bears are willing to put price more downward. And then if this should occur, this has high probability to transform the trend at this medium right here into a formation of an inverse head and shoulder. And then this pattern right there have high probability to be the pattern which may eventually lead into breakout of this long-term bearish channel right here, whereby this key level structure right here we serve as a neckline of the head and shoulder pattern right here. So this has high probability to transform into an inverse head and shoulder. So pay close attention to this currency pairs based on the higher time frame, so you don't miss this high next profitable transformation on the currency pairs of the Australian dollar paired against the Japanese yen. Alternatively, nothing is impossible if the boost should comes in aggressively next week, whereby they pull price out of the key level structure of the 76.525, then it's a signal the bulls are gearing up to break out of this multi-year resistance trend line of the channel right here on this weekly chart in order to expose the next key level structure, which acts at the price level of 80.468. So next week, I'm gonna patiently pay close attention to the Australian dollar paired against the Japanese yen. Maybe the bulls are interested to break out of this multi-year bearish channel, or maybe the bears are willing to put price downward, and this could lead to the right shoulder of the inverse head and shoulder at this medium right here, in order to constitute two more factors to aid a bullish upward rally to break out of the bearish channel on this weekly chart frame of this currency pairs. It's time to wrap up our analysis with XAU paired against the EURUSD or the gold. And then right here, we can see the gold had been on a bullish aggressive rally. You can see to the highest peak right here. And then there's a price level of the 2075.43 before gold eventually made a reversal of trend. And then I'd emphasize on the key level structure, which acts at the price level of the 1908.03. After price carved a high wave bar right here, which belongs to the family of the doji variation. I stated whenever price carved a high wave, a doji bar formation, whenever price close above the high swing or the low swings, it does signals potential of continuation in such close direction of bar. We can see how the high wave bar right there did ensure the next bar right there ensured a close of bar above the high swing, and then we can see how the next combinations of bar right there carved a bullish engulfing bar to this close of bar above the high wave right here, and then price made a short bullish upward rally. But the transformation right here failed after price made an aggressive bearish downward rally. So the key idea right here is, for as long the key level structure of the price of the 1908.03 still hold up the price of gold, then gold is still under the influence of the bullish aggressive rally right here. Not until the bears can ensure a daily close below this key level structure. So if the bears should ensure a daily close below this key level structure of the 1908.03, then it's a signal of bearish interest. Then it means there is a high for gold, and then there is what? A low high. So don't be surprised. The next key level structure the bears have high probability to transform the price of gold to is a price level of 1796.26. Alternatively, next week, if the bulls should set in aggressively on the price of the gold, and then price of gold make a bullish reversal upward right there, then transformation of trend right here has high probability to transform the low high right here into a neckline of a double bottom for a more bullish aggressive rally on the price of gold. And then if that should occur, then this is a transformation of a double bottom on the price of gold, which may constitute more bullish aggressive rally for the appreciation of the price of gold in the year 2020. So guys, this is all I have for you in this weekly forex forecast, and thanks for watching this video from the beginning to the end. If you haven't joined my free forex trading class, 3 times in a week I do hold free forex trading webinar. Click on the link at the bottom of this video so you can get access to that class. In this class, you have access to hacks to ask me questions directly. And then if you are looking out for reliable VIP membership room, whereby you can get trading signals from me, what I do in the market, how I execute my trade, there's as well a link at the bottom of this video. Check on that link so you can become a VIP member today, so you can get access to quality trading signals from me every day, every week. So make sure as well you have a trading rules which can guide your trading activity in the market. And then do not forget to like, share, comment, subscribe to this YouTube channel for more educational content of this kind. Do have a wonderful weekend. Peace.